The Euro USD is once again finding resistance there at 1.035. So we'll talk about this in today's video. I'll share my thoughts on where I think the Euro could be going here over the coming days, whether or not we'll get that retest even lower for this market, or if this is potentially the bottom starting to form. We'll also take a look at the DXY. So we just had US Consumer Price Index come out, and the numbers were a little bit softer than forecast. So inflation, ticking down just a tad, and that was enough to give the Euro a boost here into 1.035 that we've talked about here over the past few weeks. So we saw last week, just to kind of recap this a little bit, we saw last week the market come up here and close above 1.035. But if you saw those videos, what I was saying is that, in my opinion, it was not the time to get bullish on the Euro. And the reason for that is if you go out here to the weekly, you can see that the week, prior to that daily close, back above 1.035, the weekly had closed below this area. And so that meant that the daily close above here was just at the time, at least, a retrace into this candle body. And so the weekly time frame always trumps the daily in terms of these closes with regard to these key levels. And you can see very clearly here on the weekly, we got the close below last week after spiking above it intra-week. And then we got another retest here at 1.035 today. So, very obvious level here for the Euro. If you sold it from here, I think that was a good entry, a good idea, just because, again, it is a very obvious level here for the Euro. So going forward, what can we see here from the Euro USD following those CPI numbers? Now, in my opinion, guys, the DXY is not done. I don't think that the DXY rally is over. I don't think that the Euro USD pullback is over, or, correction, I should really say, because this has been a multi-month correction going all the way back here to October. And one reason I think that, we've talked about this before, but this right back here, this weekly candle from the Euro, we've discussed this many times, but you can see that we did have two imbalances back here. And both of these were serving as targets following this breakdown through here. So we had a trend line off of these lows, and I talked about this last year, but we got a breakdown through here. And my targets following that were down here at 1.035, which we got back here in November. And since that time, I've also been talking about this area down here, this pocket right around 1.02, and then potentially 1.009. And then, of course, we have parity down here as well, which we have to think about because parity does tend to serve as a magnet for markets the closer they get to it. So for now, given the fact that we have seen this imbalance filled, we don't have this one down here just yet. And there's no guarantee that we do see it, but this imbalance could serve as a magnet still for the Euro. And I also still think, I could be wrong, but I still think we get the DXY, the US dollar index, into that 1.1050 area. So I'll talk about that next. But first, I do want to mention too, guys, I think that right now, what we're seeing from these markets is that, in my opinion, the quote-unquote easy trades are beginning to diminish a little bit here for the Euro and the pound and the dollar, and things are going to become a little bit trickier for these markets. And what I mean by that, and this is especially true for the DXY, so I'm going to flip over and talk about this here. I mentioned this to VIP members yesterday in the VIP-only video, which, by the way, guys, if you do want to join us, check out the link in the description of this video for 85% off lifetime access. If you're on the website, click on that Join VIP link. And the reason I think that the quote-unquote easy trades are behind us, at least for now, is because back here last year, we talked about this reclaim down here at 102.60. So this was the bottom of this channel. And this right here was pretty straightforward. We got the close below. The market spent several weeks down here in this area. We got the bottom. This right here, this reclaim at 102.60 is where we were getting bullish. So, again, this move right here was pretty easy. Of course, relatively speaking, nothing in trading is ever easy. But when you look at this chart, this was kind of the straightforward move here, as was this breakout above that October trend line, right? So through here, we talked about this, the breakout, the retest through here. So this was straightforward. This was also straightforward up there toward 109.50. We've talked about all of this over the past few months. And so I think now with the DXY coming into this area between 109 to 110, I think things become a little bit trickier just because you have that potential for local tops in the US dollar, but at the same time, you also still have an uptrend from the USD to the point where trying to short this market is also a bit dangerous. So with that said, let me show you the trend line that I told members about, VIP members about in yesterday's VIP only video. And I showed this trend line, guys, before the market pulled back today. So I showed it back here when the DXY was up here in this area yesterday. And sure enough, we got a retest right here off of that level. So you can see that this trend line, is pretty significant here for the DXY. And you can also see that looking at this chart, we do have the potential for at least a local top forming here over the coming weeks. So if you look off of these highs, and you could draw this a few different ways, that's kind of the danger of trend lines. But you can see where this pattern, potentially comes in up there near the top of this channel, going back to 2023. And this is that 110.50 area that I talked about, which could line up with the Euro USD testing 1.009 or potentially even parity. We'll have to wait and see. But I still think, guys, looking at this pattern here, looking at the fake out we got down here, and also this pattern that we've seen here since 2023, and then you also take these two trend lines here, right? There is still that potential to get the move up here toward 110 before we see a local top form for the US dollar. And one thing too that I want to point out here is if you look at the weekly time frame, and I talk about a daily closing basis and a weekly closing basis all the time, but that's important because if you take a look here at this level, all right, so if we snap it right here to this low, we can see that we also have this high on the weekly time frame. So I'm talking about this one right here at exactly 109.53. And what you'll notice is that last week closed above. Now, levels like this tend to serve as support or resistance on a weekly closing basis, meaning that all of this price action that you're seeing through here, all this week is, relatively insignificant in terms of the weekly time frame, because the only thing that matters here is where the DXY closes this week. And we still have over 2 days left here. So what I'm thinking is if we get a strong bounce from this area down here, from that trend line, and we get a weekly close above 109.53, or thereabouts, then that could be the catalyst, the technical catalyst for that push up here into 110.50 for the DXY. A bit speculative, of course, because we do, again, have over 2 days left in this week. But a lot of times when you see this right here, when you see a weekly close above, and then you get intra-week price action down here, a lot of people start calling for tops, and then you see the market close the week back above here and take off. So we'll see where this week closes. I would say if it closes below 109.53, or let's just call it 109.50, I would say that we do have that potential for, at least a local top and some further losses for the US dollar. But with that said, I see no reason to get bearish on this market just yet. Like I said last week, guys, on Monday, I know a lot of people were getting bearish on this candle right here because it was so aggressive. But the thing about this, and I said it last week a couple times, is that first of all, this was a critical support area through here. There was no reason to get bearish. And furthermore, you had no change in structure, right? The structure here has been the same ever since back here in October. So until this changes, there is, in my opinion, no reason to get bearish on the US dollar. All right. But I really think, like I said, I think it's going to come down to where this week closes in relation to that 109.50 level. But you can see here from this trend line off of that low from back here in September, this trend line right here is really the one to watch right there at today's low. So with regard to the Euro USD, knowing that it moves inversely to the DXY, if we get those things, right, then we could see the Euro USD actually closing down here toward the low of this week. And this then becomes the area to watch, 1.02. So if you miss today's short from 1.035, like I said, this was a pretty obvious level here, and you can see a nice little rejection candle forming so far today. If this holds up, then you've got areas like this down here, 1.02. Now notice too, 2 days ago, we got a bullish pin bar. So bullish pin bar right here, long lower wick, and we saw no retrace into this area. So this down here is going to be a pocket of liquidity that the euro could target here over the next even 24 hours. So this could be a short-term trade here just for a range trade. Not financial advice, of course, just my opinion. But if we do see this week or over the coming days the market get below this area through here, 1.02, then that's going to open up that next imbalance down there at 1.009. Now, of course, if the euro can reclaim levels like this up here on a daily and weekly closing basis, closing up here, then that could start to form a bottom here. But like I said with the DXY, I really see no reason to get bearish on the US dollar or bullish on the euro, because this structure that we've seen ever since October is still in place. And you can also see where with today's rally, bulls are failing once again here at 1.035. So while this could change, we have to go with what's on the chart right now, not what we think might happen or what we want to happen. And right now, guys, the downtrend is still very much intact. There is no sign of a bottom. So until that time, I'll continue to favor shorting the euro at resistance. Subscribe to the channel and click the bell for notifications. Don't forget to join us in VIP, claim your 85% off lifetime access see the link in the description of this video. If you're on the website, click on that join VIP link. Trade well out there, and I will talk to you again tomorrow.